Alrighty, ladies and gentlemen, we're back for another live session with SPDas covering the Sydney-Tokyo overlap. Just a moment.
Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com.
SPDas, the trading floor is yours.
Yeah, thank you, Igor, and welcome everyone. Let's get started on the Euro USD daily chart as we begin this week's first Sydney Tokyo overlap. And today would be a big one on the FX and crypto stocks and major markets. The US markets would be closed today. We'll be having an effect on that tomorrow nonetheless. But I think let's see how the see the price action is so silent at this point in time. In fact, since the last four trading sessions, quickly for the first time, as we do as a practice, the first session of the week, we would always try and the first session for the day actually, we always try and print the larger degree wave counts so that we always have the bigger picture in mind. Five waves up, indicating the larger degree trend or move is on the north side for euro, which was again followed by a couple of years of corrective decline, and it's almost complete over the last week around 1.0177 mark. And if that is correctly done, along with the Fibonacci 61.8% bounce, and it's around 85 to 90% probability now that Euro bulls are expected to come back in control and pick up on the north side from here. Almost of the intensity of the previous five-wave rally. This is what is expected on the north side, right? For the next 4 to 12 weeks at least. Now, believe it or not, if this is the third wave or wave C, in either way, it's going to be a very sharp rally, a very fast one as well. Sharp, fast, and steep. That's what it is. Wave 3 or wave C, according to the wave principle. Allow me to go on an hourly chart. Now, this is what we have been constantly talking and expecting of continuous sideways action where you see now this looks like a triangle, correct? We kept on saying that corrective waves will always take its own time to materialize. It is what, 5? This is wave. This is only one wave, so I've got to pick this as 5. And another option is to pick this as 3. So maybe we are going to see one more low, possibly to complete that 5-3-5 zigzag. Or if it's a triangle and if that's wave 3 wave, then it's wave A, B, C, D, and E. Now, in that case, wave E is just terminated around, sorry, the 66 mark, which is just above the Fibonacci 0.618. So just around the Fibonacci 50% all the time. You see each drop here, the wave A, B, C, D, and E. So A, C, and E, they're all settling around the 50% mark. If it's a triangle, then prices would not drop below that low early today at 64, and we are now heading towards a break above 1.0330. In fact, the next target is now 450. Let me bring up the extensions as well, and then we'll discuss quickly the trading point of view, what we have done, and so the longs have been initialized already around the 240, 260 zone. For those who are just joining by any chance, this is the trade setup. Can still pick up on the long side. The stop loss would go, ideally it would go below that swing low. $1.0177, and the next upside targets are 460, which is again in line with the previous resistance of one of a higher degree, and this one is again previous wave 4 of one lesser degree. So it's going to it's also falling in line with the Fibonacci extensions on the previous resistances. Watch out for the next upside this way. All right, and the worst come scenario, what it would be like is maybe see a drop first to the 61.8%, and then the rally materializes. This could be a trajectory or path. It's going to be interesting. I don't know if we are out of the buy zone, in the buy zone. Let me check with the 4-hour time frame. Maybe still we are, if we go back all the way in September, that was September 24, yes. Okay, so we need to see a break above that trend line, which would be above, once the price action breaks above 450, and for that we would be in the buy zone by that time, and then a slight corrective decline to back test the trend line. Okay, this is how it could be going forward. One last time of the trend line test, and then it goes further upside. All right, that's the trajectory for euro. You can go and pick up the dollar index now. We touch base with the major markets in this session. Okay, if we try and do the trend line first from September 24, it is just on just shy of the trend line. I mean, it's looking quite eager to drop back into the sell zone now. And the daily charts for the larger degree counts are as follows. We've got wave 1, expanded flat, or running flat, wave 2, impulse 3, triangle 4, and the thrust wave 5, which is followed by Multi-year corrective wave ABC. Most important thing is that it is in three waves, which is still a correction. And if what we have done is correct, then five down followed by three up is over, and we are now ready to move five waves on the south side. The only thing is, if that is lower degree wave one, maybe lower degree wave two is either complete, or maybe one more shallow high is left to touch base the 61.8%. I'll go back on an hourly chart to emphasize that view. Here we are. That's the first wave, which is complete. we are now, we are now looking for a potential wave two up there, and then followed by three, four, and five. I think the volatility season should ideally begin this week, and it's also bringing us to the end of the January series very quickly. So it's going to be either this week or next week when we should be ready for the next wave, larger degree. As far as the Fibonacci retracements are concerned, retracements and extensions, let's do that. Again, a 50% resistance is strong, as what euro support was. In general, what it indicates for the dollar index is an overall weakness lies ahead. That could be an extended wave three, and followed by four and five. So wave four is now expected to be a sharper one. We've got a we've got a sideways kind of a wave two, and if it is a wave E termination, then look, if it's a triangle and wave E terminated, we are going to see a quick decline from here on the south side. Trading point of view, we've already entered around 109.20, so you might want to still enter shorts again around 109.50, 60 if price action matches or reaches there. Stop goes above 1 and there could be slight discrepancy because we are seeing the dollar index chart from capital.com. If you're trading from 8waves.com, then we are slightly higher price action. So I'm placing the stop with regards to that 10110.30. That is what the price for 8 wave. The providers here have price discrepancies. That's what I see. So just in case if your provider is capital.com, then you'll be seeing this price action, which we are seeing right now. Anyone else, or specifically 8 wave, then it will be around 1 close to 109.20 right now, and the stop loss would go above 110.30 in that case. Just try and stay above the high, whichever provider you are dealing with, and try and enter on the maybe 50%, which is right now it's touching already, or just one more high around the 61.618 actually. All right. So in general, it's on the south side for the dollar index, and it would be around across major crosses. Let's have a quick view. for pound. It's done what it was supposed to do all the last week actually after that first move here. So it's finally three down and three up, and maybe it's a very complex, but it looks like a three wave down. So finally, the the lower time frame of 1 hour structure looks like the first impulse followed by three and three. And if you're done correct, then we are now ready to push on the north side. That's the short term impulse expected to push through. Always try and keep your trend lines very close to you, because these lines really help us understand where the markets are in terms of the trading zones. So the moment it breaks that trend line or the counter trend line, uh, it confirms that okay, I'm back into the buy zone, because trend lines are very sensitive to the zones as well. It gives us a good idea or indication of which zone we are, and we can then further commit if required. So have your trend lines in place in the right way, and they could be the next target around 24, close to 25. But believe it or not, if that's the third wave, it could be extended, and the, the the extensions which we are seeing right now, which is 1.618, is actually it can actually go to 2.618 very quickly. If we go on a higher time frame, one larger degree, then wave four of that large degree. This is where near-term bulls would be wanting to target. That's the previous wave four of one lesser degree, which is 1.28. All right. Okay, that was pound, and interesting gold actually. Let's bring up. I think we are good to be on the 4 hour chart. We've uh, we've seen that wave three is complete on minor degree, and we are now looking to we're now expecting wave four lower. Wave four at a minor degree, so the sub waves have to be adjusted to a minute. All right, so that is wave A. We are now ABC for wave B. That's more or less confirmed. We are not seeing a triangle happening any soon. And if that is correctly done, then prices will continue declining from here. The first break, the break of 2650, which is the first support here, you see there's 2658 to be precise. The moment price action breaks below 2658, maybe today or tomorrow, it would be like a confirmation that a lower top is in place around 27.25 last week. That would be the first drop, further decline, further corrective rally, and there you are. All right. So the downside for gold is around the 2500s or 2450. Just in case if you're wanting to re-enter around this time, You can still do that partially, but keep some space for because we have already sold around the 2660 and 2670 zone. Remember last week? But please keep some space for 2730 touch. And even though the percentage is quite less, or the probability is quite less, I would still keep the option of an expanded flat uh, in the making, which could drag or push wave B a bit higher before the major wave C resumes. All right, just in case if it's an expanded flat. But if price action breaks below 2650, that expanded flat structure would be ruled out. So in general, gold is in a longer term buy uptrend. So you got to buy or keep buying, but this is not the price where we ideally do so. So if you're an investor, then you'd want to wait for prices to first decline towards the 2500 zone and then buy. And if you're a trader, then you might want to take a benefit of the short wave right now in the near term and then possibly turn higher again. All right, that is gold. And okay, the markets are going to be closed, but anyways, we'll have a quick view. It's more or less confirmed that what we projected last week as complete wave one, expanded flat wave two, now three, three, and five. It's 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 a perfect expanded flat, three up, followed by three down, and five up. So 50% is the zone where everything is stalling. Left shoulder, potential right shoulder. So if things are in place, then we are ready. In fact, the market's telling us a story that it is ready to turn lower from here in a big way. Actually, we'll touch base. Actually, we are going to see the action coming up in the next 24 hours as US will be closed today. Now you see the corrective drop coming up as expected, but so be in a buy mode. Okay, we are already in the buying mode. Those aggressive traders, if you've gotten gotten in, please remain. But I think we were decided the next buy would come around 97. So it already came to 99. So if you've gotten on the long side, it's okay. But you might want to add if prices drop towards the 97 with a stop around the 89, targeting around 110, 125. All right, so that's a good expanded flat structure which is being covered right now. You never know, it may extend towards 97, possibly 96 as well. So wave two is being worked upon right now before the third wave resumes its rally again. So keep an eye on that. The stop loss, but remains around 89. So that is also important for us. Ethereum should be on the same track. We will watch the short term. Yes, it is. Now the boundary that we are considering for the first impulse to be completed is here. And in fact, Ethereum has done even better. It dropped right away to the 3100 mark. So believe it or not, with Bitcoin, if you're not gotten into the Bitcoin long trades, definitely you might have gotten in the Ethereum because I think we were waiting for price action to drop towards 3100 zone to enter buying. So I think it's already triggered now. after weight of that impulse wave. So we are in from 3100, stop around 29, and potential targets are 43 actually, 4300. Yeah, you have that 4300 zone here. So keep that in mind. We are on the long side Ethereum again from 3100. It pays to have patience. That's what the charts are telling us a story. If had we gone impatient and long there, then we'd have to wait for that entire drop for the corrective waves. Neat little zigzag A B C. Correction in Solana also seems to be on, but Solana moved quite a bit actually to 290, which is a target. So just a moment before we try and find out the retracement, this price, Solana has already met its target. I would be skeptical now to actually wait further or enter on the long side unless and until it is a very clear Fibonacci 61.8% bounce. That is somewhere around the 212 because Solana has risen quite sharp, and it comes by no surprise. The 276 was the first extended target for the larger degree wave 5. It has come across that high already. And if there is a diverging scenario coming out, there is a divergent scenario as well. So it's not the right time to get on the buy side, but maybe you should have booked some profits there and wait for the decline towards at least 200 levels now before we decide or uh, before we decide on the next move. Sorry. Ripple. So Ripple is correct. The correction is over. Maybe one last leg could be left. I think that correction is over. So now you can move your stop loss from 2.3 to 2.8, locking further profits, and stay put on the long side with a target of around 3.7 on the upside. We are still progressing in the fifth wave. We've got wave 1, 2, 3, possible wave 4, and one more leg that is on the lower degree is left for the fifth wave to get complete. All right, so that brings us to the end of the session. Let's bring it a pause here, and we'll be back again London times. Thank you again for joining, everyone. Goodbye. Back to you, Igor.
Thank you very much, SPDas. Always a pleasure.
Yeah, thanks.
ForexLens gives you the edge. ForexLens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. ForexLens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with ForexLens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com.
Alrighty, folks. Yeah, so we'll be back at the 5 a.m. London session, back with SPDas, followed by the 8 a.m. New York session with IT Trader, covering the, so yeah, SPDas is covering classic Elliott wave theory. and IT Trader is covering the more institutional side, smart money ICT concept. Stay tuned for more updates. We're also back on at 9:30 a.m. with New York Part 2. And of course, we've got tons and tons on the go um, as we've been reporting on X. Yeah, stick around and we'll be back for the next live at 5 a.m. EST. Take care.